In today's video, a few insights into the financial markets. The financial market is a digital place where stocks, indices, commodities, cryptocurrencies, and so on are traded worldwide. This happens either directly on the stock exchange or through brokers who act as intermediaries between the exchange and the buyer or seller. The only thing reflected in the financial markets is the value within a stock or between different asset classes. If we ask ourselves the question, how is this value determined? Then it all comes back to the basics, just like we know from selling. It's all about supply and demand. If there is high demand, prices are pushed up. If, on the other hand, there is a higher supply, we will see lower prices. When it comes to retail traders, as most private investors are, and institutions, there is one thing to understand. Institutions are the big players who really want to make a lot of money in the markets, and usually do because they have the size and power to manipulate the financial markets. Furthermore, the algorithm comes into play, EP.2, the interbank price delivery algorithm. This is also designed to manipulate the psychological mindset in such a way that private investors find little structure, understanding, or, you could say, clarity in the markets. On the other hand, they serve to technically execute the implementation between buy and sell orders. I've created a PDF for you on the topic of futures and CFDs. You will find it below this video and you can read in detail what it means. We trade futures, specifically indices, namely the Nasdaq, S&P 500, and Dow Jones. Now the question, why these pairs? These pairs have a very high market capitalization and are correlated pairs. The Nasdaq covers the 100 largest tech stocks in America, the S&P 500 covers the 500 largest in America, and the Dow Jones is also a correlated pair among these. And between these markets, when divergences occur, we can detect manipulations by the big players. That's why we pay attention to all three of these markets. And overall, EP.2 works in every financial market. We simply choose these because the strategy works best there, and focusing on one pair, one asset can be a trader's greatest strength because then they know this pair inside and out and have already studied the price action of this pair for years. If you're wondering why I drew this graphic on the right, the simple reason is that with futures, we have the advantage that when we place an order here, we are actually brought into the market right here without any spread. And if necessary, our position is closed exactly here or here if we get stopped out. If you have any questions, feel free to tag one of the founders in Discord. With that, ciao ciao and good luck with your studies.